Good evening, folks. Michael Silva here. You're watching the Stock Market Brief Show. This is where we navigate the financial markets through the lens of technical and intermarket analysis. Today, we're going to be talking about a couple of areas, where to be bullish and where to be bearish. I'm going to give you why I'm thinking this and what to expect going into the remainder of this week. We're going to start off right now looking at a chart of the S&P 500. We know that we've seen a lot of volatility to the downside coming from the highs to the lows, roughly about almost 6% as far as a drop goes. And, this is the first 6% drop that we've seen since, for a while, right? We haven't seen really any pullback since October of the prior year. And we came just under this 5,000 level and we shot back up. This was actually something that we discussed as far as the call wall goes, where last time where we saw this kind of bear market, 4,200 was the call wall, the put wall, and we cut through it and we saw it kind of shoot back up, and we saw something very similar here. Now, as it stands, we're just seeing kind of a snapback rally after seeing volatility. And this is what happens in higher volatile times. You see strong moves to the downside, followed by strong moves to the upside. And if you pull up a rate of change chart and you look at one day and you date back 5 years, you'll know in times of more volatility, you'll see the rate of change go more positive, and you'll see the rate of change go more negative too, where you get really just expansionary types of volatility in both directions. And that's kind of what we're seeing right now. Now, as we're bouncing back, we're coming into a rather neutral to inclining 50-day moving average. We're right above a declining 20-day moving average. So medium term, we're neutralizing. Shorter term, we're kind of down. And then the longer term down here, we are still remaining up. Now, if I want to talk a little bit more in depth about as far as the trend goes, we'll take a look at the S&P 500 on the 15-minute time frame, and you'll call out that we're above that purple line. That purple line is the 5-day moving average. We almost came down into that today after the QRA announcement, a little macro report, and we since recovered from that level. We didn't quite pull down, but this is a positive sign, seeing the short term start to turn back up. So that right there is bullish. Another thing that we pay attention to is the flip line, and the flip line here is currently at 50.90, and the flip line tells us how dealers are going to position, right? If it's below the flip line, we're in negative gamma territory. If we're above it, we're in positive gamma territory. When we're in positive gamma territory, you look to buy the dip, sell the rip, buy the dip, sell the rip. That's what dealers do. When it's below the gamma flip line, you sell into selling, you buy into buying, and you get what we've been seeing over here for quite some time. As you note, we were in quite a volatile, I'll show you the net gamma time series. This period right here was all negative gamma. So this shows us when we're below the flip line. And for these last few days, 3 days or so, we've been in positive gamma territory. Over here was in positive gamma territory. And then when we had a long kind of stretch over here, that happened to be the bear market, or not bear market, the 10% correction that we saw over here in 2023. So these little areas there, Okay, so continuing on, we're in positive gamma territory. We're above a rising 5-day moving average. So those are both checks for the bulls. So that's a positive sign. Now, the unfortunate thing is we're coming up into another heated earnings week. And on top of that, we have a lot of information being dropped from a macro perspective. And this is where things get a little bit foggy. Okay, so coming this week, right, we just had our Dallas ISM Manufacturing Index, we had some bill auctions, and then what caused a lot of volatility today was the Treasury refunding financing estimates. When that came out, though, we've since recovered. Tomorrow, we have some unemployment stuff. We have Redbook, we have Case-Shiller, Chicago PMI, CV Consumer Confidence. But I think most people are going to be paying attention to ISM Manufacturing PMI, JOLTS, and then the Fed interest rate decision press conference on Wednesday. Now, we're not going to get a dot plot come Wednesday, so all attention is going to be focused on the press conference and what Jerome Powell says, not only when he answers questions, but when the press conference, when the interest rate decision comes out. We kind of know what's going to happen, right? We know what's going to happen as far as a rate hike, rate cut, or rate pause, right? As it stands right now, there's a 95% probability that we're going to stay where we currently are. And so that's, if he cuts, that'll be a surprise. If he raises, that'll be a surprise. So it's going to be important to pay attention to what he says in posturing for a potential cut there in September, or if he just takes it off the table completely, given the context of hotter than expected inflation, PCE, when all this stuff came out, and we're going to try to get his response there. Okay, so there's a lot of that macro data coming out. That's Wednesday. Thursday, we have some more stuff. And Friday, we have some more stuff, including the non-farm payrolls and the unemployment, okay? The employment cost stuff, this is not nearly as important as on the Friday report, May 3rd over here, okay? So if we continue on, I want to look at what's coming out as far as earnings go. And Tuesday, so tomorrow, right after the close, we have a big dog reporting. Amazon, right? AMD is a pretty big one. SMCI, right? These are big ones, but they don't hold a candle to Amazon. Amazon is a larger market cap. So if I were to go into the, S&P 100 over here and I look at the, highest market cap names, Amazon's up there, 1, 2, 3, 4, fifth place, right? Other than technically sixth because Google has 2 tickers, right? So a larger market cap name, that one can very well move markets. And then Thursday after the close, we have Apple as well. So some of the bigger names from the S&P 100. If I was just looking at the S&P 100 and seeing what was reporting earnings, let me extend this out and we'll take a look here. We have Eli Lilly. We have, I believe this is Coca-Cola. Yeah, in a day, AMT, which is Amin Tower. We have PayPal reporting. And I'll go over the expected moves there. I think that's actually in the morning. Yeah, before the open, we have all those McDonald's and so forth down the list. So a big week. A lot of different earnings are reporting, and this could move markets, obviously. Okay, so another thing that I wanted to call out here was some of the key levels to pay attention to. So not only is the 5-day moving average and the Gamma flip line important, but Gamma Labs has their own kind of CTA model, and what they had mentioned in a recent note was they believe that you can see more systematic selling from a CTA perspective, commodity trading advisor, so basically algorithms, they trade momentum, if we start to get under 5,100 and the Gamma flip line. So the reason why the thumbnail was like, hey, well, bearish here, but bullish above, is because currently we are in positive Gamma territory and currently we are above a rising 5-day moving average. So if we start getting under here, what can happen? Well, remember how we've seen things play out in the past. You get rips to the downside, rips to the upside, rips to the downside, upside, downside, upside, and so forth, okay? So it's positive to see this move. The move has been kind of a one-way shot, and it's been really kind of being shaken back and forth because of some earnings that have been coming out. Most recent one that really shook the markets was Google. Now, if I go into the book map, this kind of allows you to see behind the candlestick, okay, see where orders are hiding out. And this has caught my attention down here, 49.50 and 49.60. These are not small orders. They've been here now for over 7 trading days, or not 7 trading days, 7 total days. And we're talking almost 2,000 contracts. The longer this stays here, the more likely it'll get filled. It's the same thing that I saw orders way to the upside before, and it was there for months, and it eventually got filled. And now there's orders to the downside. So these are going to be interesting levels. They might get pulled, right? They're unfilled orders. But as it stands right now, we have 600 contracts down at 49.50, 49.60. We have about 1,900 contracts. So, what do they know? Who is this trader? I don't know. Is it a big firm? I don't know. But that's a lot of contracts, and it's worth paying attention to. Where is this in relation to the chart? So we'll pull up ES here, and you take a look at ES, and I drew out these lines right over here, are where all those orders are kind of are around, okay, which is the swing low from this area. So whoever's orders are, they believe that we might see the market pull back in at some point and retest this low. If that's the case, I don't know. So we'll pull up the SPX chart, and I'll show you once again why I say, okay, if the CTA model is going to hold true and we're going to hold 5,100, right, this means if we get below this area, this would be bearish and we can go for the swing lows. But if we can remain above it, I think that's clear as day that we're going to be in positive Gamma territory and we're above a rising 5-day moving average, and that opens the door. And we're kind of in that sweet spot here, whereas if we pull down a little bit, okay, you can get out fast. But if we recoup, it leaves the opportunity to still come back up. So it gives you a very well-managed area of risk from both a bearish and bullish perspective. Now, I'm not going to be trading myself to the short side downwards. I am constantly looking for the way to the upside as it stands right now. If I am shorting, I personally like to do smaller size positions, and that allows me to kind of allow the trade to play out. Or if I'm doing it intraday, I feel a little bit more comfortable with that where I'm in and out, but I'm mostly looking for long setups in these markets because it's easier to make money from the long side than it is the short side. It's just how things are. If we take a look at the 11 sectors that make up the S&P 500, XLY performed the best today, and we haven't seen this really slow down, right? We're getting a lot of those earnings and we're seeing big snaps. Tesla was the big one today, had some news out of China, right, about something self-driving, and we saw some follow through there. But on the weekly time frame, if you still look at this, right, we came from the pandemic low to the 2022 bear market low, and that tagged right into here perfectly, which we talked about the day of on the live stream. We saw that actually happen in real time. And we thought, okay, well, where does it bounce to? Okay, well, take a look here. There's another trend line where you see this, they're all lower high. So as we're bouncing, still has the potential to go up higher, but what I would like to see is price to consolidate for a while. If it is going to see a big breakout and then bust out of there like absolute crazy. But as it stands right now, it's seeing a reflexive bounce while it's down on the year into declining big time moving averages. So I'm not going to get too crazy into this one. I'm going to wait to see how this one kind of plays out there, okay? So that's XLY. The reason why I'm bringing up the 11 sectors is because look at XLU. XLU was one of the top performing sectors today, and these are more defensive type names. And XLU, you can see it's kind of breaking out of this little downtrend right here, and we're seeing some strength. It's been a pretty strong move, so you'd want to see this consolidate. But if utilities is going to continue to move higher, pay attention to XLP as well, right? Consumer staples, utilities, these are more defensive type posturing. XLB is one that was on the watch list or the trade ideas that I posted. If you're in the Discord, if you're not there, it's only $9 a month. You can come in. I don't have the website up. There's a pinned comment in the description, but I post some of the charts that I'm looking at. The last one was XLB. And then I also give my tight list so you can create your own stuff. But it's tight lists, the Trade Ideas channel. They're fairly similar, but the tight list I'll update weekly, and then the Trade Ideas I'll post some in there as they come out. But XLB was one, and we saw a nice little breakout of this. I just noticed a trend line. I noticed price action getting very tight. Made sense to see a pop of some sort. We saw a pop to the upside. So nice little catch there if you were able to catch it. Understand that this is going to have to consolidate at some point too as well. So, I mean, I'm out of the position. I took profits on this day, and that was it actually pretty much. And then I have, did I take it just this day? I took a little bit out on this day, and I took a little bit out this day, and I think I exited out fully today. I'd have to double check. I can't quite remember. No. I don't think I traded today. I think it was all out on the prior trading day. And then Monday I didn't play it. Okay, so that's about it on today's episode. I don't think there was much more to cover. Yeah, so once again, just pay attention. Bearish under these levels, bullish above them. Stay above a rising 5-day moving average. That's positive to see. More consolidations, more follow through to the upside. The daily expected move going into tomorrow, the upside is 512.95, so we'll call it 513. Downside is 507.17, so we'll call it 507. And we are back above the monthly lower expected move. As we were down here, we said the higher probability was to come back up, and we sure as heck did come back up there. As far as the weekly expected moves go, 516 to the upside, 499.90 to the downside there. That's what's expected based off of implied volatility. Hope you all have a good trading session today, and I'm going to try to be live again tomorrow, so be sure to tune in. See you later.